Bitcoin is literally repeating the previous cycle structure on its 3-week chart. So if history repeats, we might not be at the start of a bear market. We might actually be at the launch pad of the next expansion. But there's only one problem. On the daily and the 4-hour charts, momentum is shifting. So is this the final dip before a new all-time high, or is it the start of something deeper? I've also taken 2 new trades, one on Ethereum and one on Aave. So if you're serious about positioning before the next expansion move, subscribe to the channel, turn on those notifications, and join the free Telegram below. I'm entering new trades almost every single day. Don't miss out and come and join the fun. Welcome to Bitcoin on Point. Let's begin. And we're going to start with our macro backdrop for today because Bitcoin is not speculation anymore. We have just witnessed capital rotation at the highest level. BlackRock's spot Bitcoin ETF just bought $275 million worth of Bitcoin in a single day. So this is by far not a small inflow. This isn't slow accumulation. This is direct aggressive positioning, and that's after market volatility. Now, next up, Tim Draper just said trillions are about to flow into Bitcoin and that the USD system as we know it will not dominate forever. Now, he's also calling for a $10 million Bitcoin. Again, this is the typical numbers game, but the bigger message is this. Smart capital sees a structural change coming. Now, whilst the headlines sound extreme, Europe's largest asset manager, Amundi, has just disclosed over $500 million in Bitcoin exposure via MSTR. That's a $2 trillion financial giant buying the dip. Let that sink in. So retail sees red candles and fear, but institutions see red candles and discounted entry. We have ETF inflows, billionaire conviction, and asset managers accumulating. This isn't hype. This is positioning. And when trillions start rotating, price does not move slowly. It tends to expand violently. So with all that wrapped up on the macro, let's take this into our technicals. And we're going to start with Bitcoin's 3-week chart and look if history is actually repeating. So the way we break this down is based on cyclical data. If we look at the prior all-time high for Bitcoin in 2021, what we had was a full-blown bear market that brought us back down to a major level of support. Now that level of support, which marked the low in 2022, was the prior all-time high from December of 2017. So we tapped out in 2021, had a major correction, and found support on the previous cycle high. Now fast forward to 2026, we've had a local top at 126k and Bitcoin is replicating the same structure. We've had a major correction back down to support, which was the prior highs from 2021. So if we are repeating the same behavior and Bitcoin can defend sort of 60 to 50k, this could be the launch pad that's gearing up for major expansion towards 150k plus. Now again, this isn't something we're looking at over the next week or 2 weeks. This will take time to unfold. It's a macro fractal. So we're literally flipping previous cycle highs into support. And if Bitcoin can do that again, then this is where the trajectory is looking bullish in the coming months. Now let's take this over onto the daily and into the 4-hour because this is where we're seeing potential momentum shifts. On the daily, Bitcoin is forming these lower highs and it does have this descending level of resistance. So every time we've ran up into resistance, we've placed these highs and then initially rolled back over. Now we do have a demand/liquidity pocket below, and this again sits between 64 to 60k. This is the weekly order block that we've been discussing on the channel for some time. So the fact that we've recently tapped into the descending resistance now points towards that momentum shift and actually coming back down once again into this deeper demand/liquidity pocket and waiting for a reaction, right? And this will tell us whether, again on the daily, albeit on the 4-hour, whether this momentum shift is actually going to mark a local bottom before a massive reversal, which would respect this history repeating cycle, or if we're actually going to start coming back and losing this key demand area. So if Bitcoin loses 60k, we're looking towards 50k, right? 55k. However, this is a critical demand zone and it's been being respected ever since we tapped down below 60K at the beginning of February. So on the 4 hour here, it's also very evident to see we did have this sort of triangle resistance, symmetrical triangle formation. I do apologize. And Bitcoin was forming this sort of level of support, level of resistance, level of support, level of resistance. It initially lost that support, confirmed it as resistance, and then retraced back down for a liquidity grab on 62K. Now, from 62K and that liquidity sweep, we've then seen another rally, which has brought us back into the previous resistance of the triangle. Do you see what I mean? So we had this resistance for several days throughout February. We lost the support, rotated back down into demand, and have now seen relief back into that same resistance. So this is why there's a momentum shift. We're reacting from the exact same resistance line that we've been placing higher lows on ever since February, the beginning of February. So there is depleting buying pressure, there is weakness, and we do have that 60K demand below that will potentially mark a structure shift and whether we see that bullish reversal or continue to 50K. And this is why it's such a game-defining moment on the 3-week chart. Because if history does repeat and we hold the line above the wick low at 60K, this is where the expansion is gearing up for later parts in the year, right? So I hope you're all with me on Bitcoin. The 3-week time frame history is potentially repeating. The daily and the 4 hour are showing momentum shifts, however, and we have 60K waiting below as a support barrier. So now with Bitcoin wrapped up, let's head over to our trading environment and we're going to look at ETH on the 2-hour time frame. Now, it's very evident to see that over the last couple of days, since Wednesday, we did see a buy-side liquidity sweep up to 2.1K. And this is the major supply/resistance block for ETH throughout February, right? Similar to Bitcoin that's been respecting lower highs, ETH and a level of resistance, ETH also has this supply and resistance block at 2.1K. So we did see a massive rally into that buy-side liquidity, and now we have an entry at market position with a 15x leverage. It's a 1-to-3 risk-reward ratio with 1% of our capital deployed, and this is just something we're looking to capitalize on. We had the buy-side liquidity sweep, we've got a market execution, and now we're riding the trade looking for our TP back down at the local lows from early February. We're simply following the momentum from the buy-side liquidity sweep, right? So that's the explanation. It was at resistance. This was a perfect opportunity to look for a short, and we're following that momentum in this trade. Now let's look at Aave. And this setup is potentially what we have is some sort of falling broadening wedge. And this is a bullish reversal structure. And this is why I had my eyes on this trade, because it's got a level of resistance and a level of support. And again, if it does hold these higher low formations, which it's been building since Monday, and we can respect these higher lows, this is where we might see that opportunity, albeit considered we're in dangerous SL area. This is where we could see the rebound and finally get the break of this falling wedge or bullish broadening falling wedge reversal. So there's higher lows building. We have a reversal, a bullish reversal structure building, and we're looking for that perfect entry to capitalize and look for that long up towards the previous points of contact, which is where the bullish reversal structure actually started forming. So our TP is back where the formation of this reversal pattern began. We're inside this structure still, building these higher lows, and this is what's offered us the entry. We're looking for that bullish breakout and to retrace back up to where the pattern started forming. And that's the breakdown of Aave. So we're active. 2 trades. We're capitalizing on buy-side liquidity sweeps. We're capitalizing on bullish reversal structure. And all of this is ongoing and can be managed inside our Profits Precision dashboard. Guys, you get 30 days free access to this dashboard, and it's brilliant. It monitors everything inside a trading environment. And you can see here that we're taking our account from $10,000 to $100,000. We're currently up 11%, which our net profit then sits at $1,100, 10 total trades, a 60% win rate. Bitcoin, our latest long, was a $571 profit. And you can keep up with all of this just by simply following and joining our community on Telegram. The links are in the description. So don't miss out, because this is where the real fun is. This is where the trading environment lives, and you can be a part of it. So let's summarize the video. Bitcoin on the 3-week is repeating structure, and if we defend 60 to 50k, this could be gearing us up for expansion based on the prior retest of the previous 2021 highs, which in 2018 was a macro level of support before this expansion to our current all-time high. We have Bitcoin on the daily and 4-hour with lower highs and momentum shifts, signaling a reversal back down to 60k to look for another bullish rebound. We have ETH and Aave with 2 active positions. ETH structure was the buy side liquidity, which gave us the entry to continue with the sell side momentum. Aave is in a bullish reversal structure. Higher lows are forming. We do have a protected stop loss below, but nonetheless, if this does break out to our upside targets, this is where we could lock in some more profit and actually boost up our trading platform. So we're active. We're in the environment. Join, like, and subscribe, and I'll see you in the next video.